Metals are consolidating as China signals stimulus, with some finding more support than others. But Phil Carr, will the PBOC's more flexible policy shore up gold?
Absolutely. So the more flexible policy from the PBOC and also more recently the stimulus from the ECB, we've seen that definitely have an impact on the gold market. More recently, actually, on the ECB move on Thursday, the 3rd of December, caused gold to break out to the highest level since January earlier on this year. So we had a huge move and also short covering on the move by the ECB, and that has definitely had a big impact in the gold market. In fact, we've not really broken down significantly here on gold since the US interest rate hike on the Federal Reserve statement.
Gold and silver prices fell to multi-year lows in December. Not coincidentally, so did NYMEX crude oil futures. But how would you explain this correlation? And how would you sum up 2015 for this yellow metal?
Well, crude oil has certainly weighed down the prices of gold more recently. We've been trading crude oil in longer-term positions and also on day trade positions. It's been very lucrative. If we have a look at oil, this week, in fact, it broke down to 11-year lows. We've seen gold retesting 6-year lows. So any major moves on gold at this point to the downside, I do think that we'll get some sort of capitulation, form a low towards the end of the year if we do see that support broken, and then we'll rally again into the beginning of next year, which typically, seasonality-wise, is the start of what is known as the January effect, where we tend to see a lot of fresh funds coming into the market. It's a cycle which is, if you have a look at multiple time frames over 5, 10, 15-year charts, you can see each year over the month of January is very supportive for the precious metals, particularly gold. So I'm expecting any move to the downside to be short-lived over the next 2 weeks on gold.
According to the International Monetary Fund, Kazakhstan increased its gold reserves for a 38th month, as Russia and Turkey also expanded holdings. Do you see these EM countries as becoming bigger players in the gold market?
Absolutely. I do see them becoming bigger players in the gold market, particularly down to the weakness in the currencies at the moment. So if you go out and have a look, for example, at the Brazilian real at the moment, which has been trading this year against the US dollar at 5-year lows. We've seen tremendous weakness in emerging market currencies. Also, if you have a look at the South African rand, which recently dropped against actually the pound to all-time lows recently. It was 24 rand to the pound just recently in December. So we're certainly seeing some weakness across the emerging markets in their currencies, which is prompting more purchasing of gold here. So I do see them becoming bigger players as we head into 2016.
There have been calls to see gold challenge $1,000 an ounce in the coming few weeks or few months, before putting in a major bottom shortly thereafter. But Phil, what key levels would you think gold could hit in 2016?
Well, I would definitely agree that we could revisit $1,000 an ounce. So I do expect potentially some erratic moves on gold. However, as we head into January, I see this buyback opportunity. So typically, we do see precious metals rally. So I would expect gold to be stronger in 2016 and 2015. However, it will follow, I expect, its seasonality tendency. So I do expect there to be a significant move over the first quarter to the upside. I expect it to consolidate or weakness over the summer months, but then we could put a bottom into the market, either in December, which over the next couple of weeks, or in the summer months next year in 2016. And then ultimately, I would be anticipating a stronger rally between August through to December next year, and ultimately closing the year with a gain as opposed to a loss. So far in 2015, we've seen gold down over 9% year to date. I would not expect a similar move over 2016. I think we'll get support. We will form a base and bottom over 2016. There are a lot of factors which are supportive for gold, but I don't think we'll see that move until the final 2 quarters of next year, of 2016.
Well, what does 2016 have in store for gold and the commodity complex? Stick with us at Dukascopy TV to find out. Thanks for watching, and bye for now.